Welcome to our deep dive into Apollo Hospitals Enterprise Limited, commonly known as APPOLOHOSP on the stock exchange. Founded in 1983 by Dr. Pratap C. Reddy, Apollo was India's first multi-specialty corporate hospital. Today, it stands as a dominant force in the Asian healthcare landscape. For investors, Apollo represents more than just a chain of hospitals. It is a vertically integrated healthcare ecosystem. As a Nifty 50 constituent, it commands a significant market presence with a valuation exceeding $10 billion. We will explore how this pioneer has transitioned from a traditional provider to a digital-first healthcare giant, making it a critical case study for any serious business professional or investor in the Indian market. Apollo's strength lies in its diversified revenue streams, which insulate it from sector-specific shocks. The business is organized into three core segments. First, healthcare services, which comprises its world-class hospitals. Second, Apollo Health and Lifestyle, which manages primary care clinics, diagnostic centers, and specialty birthing centers. Third, and perhaps most exciting for growth investors, is Apollo Health Co. This segment houses its massive pharmacy distribution network and the burgeoning Apollo 24/7 digital platform. This integration allows Apollo to capture value at every stage of the patient journey, from initial digital consultation to physical surgery and post-operative medication. Analyzing the financials reveals a company in a robust growth phase. In the recent fiscal year, 2023, Apollo reported a consolidated revenue of 16,612 crore rupees, marking a significant 15% year-over-year growth. More importantly, its EBITDA margins have remained resilient at approximately 12.5%, even while the company aggressively invests in digital transformation. The hospital segment continues to be the primary cash cow, boasting high occupancy rates and an increasing average revenue per occupied bed, or ARPOB. This financial discipline, combined with strategic capital allocation, has enabled Apollo to maintain a healthy balance sheet while funding its ambitious expansion plans across Tier 1 and Tier 2 cities. The crown jewel of Apollo's future strategy is Apollo 24/7. This digital platform is a masterclass in omni-channel healthcare. With over 25 million registered users, it bridges the gap between physical and digital care. Users can book appointments, consult doctors via video, order medicines for 2-hour delivery, and access diagnostic reports. For investors, this platform is a data goldmine, allowing for personalized healthcare and improved patient retention. The digital segment is currently in a spend-to-grow phase, but it is rapidly scaling towards profitability, aiming to become the largest digital health platform in India by leveraging Apollo's existing 5,500-plus pharmacy outlets for fulfillment. Physical capacity remains the backbone of Apollo's dominance. The company operates over 70 hospitals with a combined capacity of more than 10,000 beds. This scale is unmatched in the Indian private sector. Their hub-and-spoke model ensures that high-end quaternary care is centralized in major metros, while smaller reach hospitals provide secondary care in emerging markets. Furthermore, their pharmacy network has expanded to over 5,500 outlets, making Apollo one of the largest retailers in the country. This massive footprint creates a significant entry barrier for competitors and provides a huge captive audience for their specialized clinical services, such as cardiology, oncology, and organ transplants. What makes Apollo a moat business? It starts with brand equity. In India, Apollo is synonymous with high-quality healthcare. They performed the first successful liver transplant in India and continue to lead in clinical excellence. Their second moat is the integrated ecosystem. A patient rarely needs to leave the Apollo network for any medical requirement. Third, their deep relationships with insurance providers and corporate clients provide a steady stream of institutional revenue. Lastly, their ability to attract top-tier medical talent is a critical advantage. By offering doctors access to cutting-edge technology like proton therapy for cancer, Apollo ensures it remains the preferred destination for both practitioners and patients. No investment is without risk. For Apollo, the primary challenges are regulatory and competitive. The Indian government occasionally imposes price caps on essential drugs and medical devices, like stents and knee implants, which can squeeze margins. Additionally, the hospital sector is highly capital-intensive. Building new facilities requires significant upfront investment with long gestation periods. Competition is also intensifying, with players like Max Healthcare and Fortis expanding aggressively, and new entrants backed by private equity entering the fray. Finally, the success of the digital segment depends on Apollo's ability to compete with tech-native startups in the e-pharmacy space, which requires continuous high marketing spend. In conclusion, Apollo Hospitals is a rare blend of a defensive healthcare play and a high-growth tech story. With India's healthcare spending as a percentage of GDP expected to rise and medical tourism returning to pre-pandemic levels, Apollo is perfectly positioned to capture this tailwind. Analysts are particularly bullish on the pharmacy segment's path to a potential IPO or value unlocking event. While the stock may trade at a premium valuation compared to peers, its integrated model and digital lead justify the quality tag. For the long-term investor, Apollo offers a front-row seat to the formalization and digitalization of Indian healthcare. The goal remains clear: to achieve a 20% return on equity in the coming years.